Hello, and welcome to Gentle and Clear English. Here, you will have great experiences with real stories in a clear, slow, and educational way about everyday life in America and around the world. So, enjoy, relax, and learn. In the history of the United States, the relationship between the President and the Federal Reserve has always been important, but often quiet. For most of American history, the central bank and the president worked side by side, but with a respectful distance. The Federal Reserve was designed to be independent. Its job is to focus on the health of the economy, not the ups and downs of politics. Presidents come and go, but the Federal Reserve continues its mission to keep inflation under control, support jobs, and maintain a stable financial system. However, when Donald Trump became president in 2017, the relationship between the White House and the Federal Reserve changed dramatically. What had always been a professional, quiet, and sometimes tense relationship quickly became loud, public, and filled with conflict. To understand this story, it is important to first understand how powerful the Federal Reserve is. The Federal Reserve, often called simply the Fed, is the most important central bank in the world. Its decisions affect not only the American economy, but also economies all over the globe. When the Fed raises or lowers interest rates, it influences everything, from how much you pay for a mortgage, to how much businesses pay to borrow money, to how strong the U.S. dollar is against other currencies. It affects inflation, jobs, investments, and even the prices of food and gas. The Federal Reserve was created in 1913 after a series of financial crises showed the need for a strong, stable, and independent central bank. Its main goals are simple, in theory, but very difficult in practice. The first goal is to keep inflation low and stable. The second is to support maximum employment, meaning as many people working as possible. The third is to make sure the financial system is safe and stable. The chairman of the Federal Reserve is one of the most powerful people in the world, even more powerful than many presidents and prime ministers. That is because the chairman controls the decisions on interest rates, controls the money supply, and can influence markets with just a few words. Investors, banks, and governments listen very carefully to every speech, every interview, and every signal from the Fed. Jerome Powell became the chairman of the Federal Reserve in 2018. Interestingly, he was nominated by Donald Trump himself. At that time, Powell was seen as a safe, experienced choice. He had worked in government before and had years of experience in finance and banking. He was considered a moderate, not too aggressive about raising rates, but also serious about controlling inflation if needed. At first, Trump seemed satisfied with his choice, but that did not last long. As the U.S. economy continued to grow during Trump's presidency, Powell and the Fed began raising interest rates step by step. The reason was simple. When the economy grows too fast, it can cause inflation. Prices start to rise, and the cost of living becomes more expensive for everyone. Raising interest rates slows things down a little bit. It makes borrowing money more expensive, which means fewer loans, slower spending, and less risk of inflation. But Donald Trump had a different view. He believed that the economy could keep growing without causing inflation. He wanted low interest rates to keep the stock market high, to make businesses happy, and to help his chances for re-election. Trump started criticizing Jerome Powell in public. He called him names, said he was making bad decisions, and even asked if he could fire him. No president had ever spoken like this about a Federal Reserve chairman in modern history. Legal experts quickly explained that the president cannot fire the chairman of the Federal Reserve just because he does not like his decisions. The Fed was created to be independent, exactly to avoid this kind of political pressure. If presidents could control the Fed, they could lower interest rates right before elections to make the economy look good, even if it was bad for the long-term health of the country. Trump's attacks became louder. He called Powell clueless, a terrible communicator, and a bigger problem than China. On his social media, at rallies, and even during official speeches, Trump blamed Powell for every problem. In the economy, whenever the stock market went down, Trump said it was Powell's fault. Whenever there was economic uncertainty, he pointed the finger at the Fed. Powell, on the other hand, remained calm and professional. He rarely responded directly to Trump's comments. Instead, he focused on explaining the decisions of the Federal Reserve clearly to the public. Powell repeatedly said that the Fed's job is to follow the data, looking at inflation, employment, and economic growth, not the opinions of politicians. The tension between Trump and Powell became one of the biggest stories in economics during those years. Markets watched nervously every time Trump tweeted about Powell. Sometimes, a single tweet from Trump criticizing the Fed was enough to move the stock market up or down by hundreds of points. Investors were confused. Should they listen to the president or to the Federal Reserve? Then, in 2020, the COVID-19 pandemic changed everything. The U.S. economy crashed as businesses closed and millions of people lost their jobs. Suddenly, both Trump and Powell had the same goal: save the economy. The Federal Reserve dropped interest rates to almost zero and launched massive programs to support businesses, banks, and even state governments. Trillions of dollars were injected into the financial system. For a while, the conflict between Trump and Powell disappeared. They both focused on fighting the crisis. But as the pandemic passed and the economy started to recover, new problems appeared: massive government spending, supply chain problems, and a surge in demand caused inflation to rise sharply in 2022 and 2023. Prices for food, gas, housing, and almost everything else began to rise faster than anyone had seen in decades. Once again, the Federal Reserve had to act. Powell and the Fed began raising interest rates quickly to fight inflation. The goal was simple: make borrowing more expensive, slow down spending, and cool the economy enough to bring prices down. By 2024, inflation was finally starting to fall, but interest rates remained high. This was painful for many Americans. Mortgage rates climbed to over 7%. Car loans, credit cards, and small business loans became more expensive. Families found it harder to buy homes. Rent prices stayed high. Many people were frustrated. They felt like things were too expensive, and they wondered when it would get better. Donald Trump, running once again for president in 2024, saw an opportunity. He began attacking Jerome Powell again. On his social media platform, Truth Social, Trump called Powell the worst and a real dummy. He blamed Powell for high interest rates, high mortgage payments, and the financial pain that many families were feeling. Trump argued that the Federal Reserve should cut interest rates immediately. He said that Powell was hurting the American people and damaging the economy. Powell, however, resisted. He explained in public speeches that inflation was still a risk. cutting rates too quickly could cause inflation to return. Powell said that the Federal Reserve needed to see clear and solid signs that inflation was under control before lowering rates. He wanted to avoid the mistakes of the 1970s when the Fed cut rates too soon, and inflation came back even worse. The fight became more than just an argument between two men. It became a symbol of two different visions for the American economy. Trump believed in aggressive action, fast growth, and taking risks. Powell believed in caution, stability, and following the data carefully. The markets reacted to every word. When Trump posted about Powell, the stock market often moved. Investors worried that political pressure could force the Federal Reserve to change its policies. Some feared that if Trump returned to power, he might try to take more control over the Fed, breaking decades of tradition and independence. Meanwhile, regular Americans continued to feel the pressure. A young couple trying to buy their first home faced mortgage rates that made monthly payments hundreds of dollars higher than just a few years ago. A small business owner trying to expand faced higher loan costs, making it harder to invest in new equipment or hire more employees. A single mother using credit cards to cover basic expenses saw her interest rates rise, making it harder to pay off debt. These were not just numbers on a screen. These were real struggles faced by millions of people. And behind those struggles was a bigger question. Who should control the economy? Should the Federal Reserve be fully independent, run by experts who are not elected, or should elected officials like the president have more say over interest rates and monetary policy? Trump argued that the Federal Reserve was too slow, too bureaucratic, and out of touch with the needs of ordinary Americans. He said that high interest rates were hurting families and businesses, and that the Fed should act now to cut rates and stimulate the economy. Powell argued that the danger of moving too fast was real. If the Fed lowered rates too soon, inflation could rise again, making things even worse. He pointed to history as his guide. In the 1970s, the U.S. faced a terrible period of high inflation because the Federal Reserve acted too slowly and cut rates before inflation was truly under control. Powell did not want to repeat that mistake. By mid-2025, the tension remained high. The economy was growing, but slowly. Inflation was falling, but not yet back to the Fed's target of 2%. Interest rates were still high, and millions of Americans were watching closely. Would the Fed start cutting rates soon? Or would Powell continue to wait? Trump's criticism continued. He even joked on Truth Social about whether he could make himself the chairman of the Federal Reserve to fix the problem. Of course, that is not legally possible. The Federal Reserve is protected by law from political interference. The president cannot fire the chairman without cause, and disagreement over interest rates is not a valid cause. Despite that, Trump's words still mattered. They created uncertainty in the markets. They raised questions about the future of the Federal Reserve's independence. Some experts warned that if political leaders tried to take control of the Fed, it could damage the credibility of the U.S. financial system. Investors around the world trust the U.S. dollar because they believe in the stability and independence of the Federal Reserve. If that trust were broken, the consequences could be serious, not just for the U.S., but for the entire world. At the same time, Powell remained steady. In every press conference, he repeated the same message. The Federal Reserve would do what is necessary to bring inflation down. It would not be influenced by politics. It would not act based on what the president or any political figure wanted. Instead, it would follow the data, look at the economy carefully, and make decisions based on facts, not pressure. As this battle continues, one thing is clear. The future of the American economy hangs in the balance. The decisions made in this fight, whether to raise rates, lower rates, or hold steady, will shape the lives of millions of people. It will affect whether families can buy homes, whether businesses can grow, whether inflation stays low, and whether the U.S. avoids a recession. And beyond the United States, the whole world is watching. The U.S. dollar is the most important currency in the world. The policies of the Federal Reserve affect interest rates, exchange rates, and financial markets from Europe to Asia, from Africa to Latin America. So the question remains, who should control America's money? The independent experts at the Federal Reserve, following data, history, and cautious analysis? Or elected leaders, responding to the pressures of politics, elections, and public opinion? For now, Powell remains in his position. His term as chairman continues until 2026. But if Trump returns to the White House, there are questions about what will happen next. Will Trump try to replace Powell when his term ends? Will he appoint someone more loyal to his vision? Someone willing to cut rates quickly, no matter the risk? Or will the traditions of the Federal Reserve's independence continue? Only time will tell. But one thing is certain. The battle between Trump and Powell is not just about personalities. It is a battle over the future of the American economy. It is a battle over how money, power, and policy are balanced in a complex and interconnected world. And it is a battle that will have consequences for years to come, not just for the United States, but for the entire planet.